Hello everyone. As we all know that we are celebrating Azadi Ka Amrit Mahotsav in this Independence Day. India has completed 75 years of independence. These are some facts that I would like to share with you through presentation of the market outlook for August 2022. Let's start with the presentation. Mera Bharat Mahan. These are some facts that prove that the Mera Bharat is really Mahan. That India has outshined the major economies of the world, and it has given 8.7% of annual growth GDP rate as compared to the other developed countries. In the other terms, that at the time of the independence, the GDP numbers were the 2.7 lakhs crore only, but now it has stand today at the 147.79 lakh crores. It means it has given around 105% kind of CAGR return in during its 75 years. If we talk about the Indian forex, that's at the time of the independence or after the some years of that, in 1950-51, the forex is stand at the 129 crore, but now it is stand today at 46 lakhs 17,000 crores. That's India has spreading its roads all around the country. It's connecting all the villages with the tribes area to that's with urban areas. So at the time of independence or 1950, the road was only zero point 0.4 million kilometer, but now today it's stand at 6.4 million kilometer. If we talk about that, things happened in the month of July. Srimati Draupadi Murmu has appointed 15th President of India. Rupee has showed that the all-time hit of the 80 rupees 16 paisa against the dollar. Government has rolled out the 5G spectrum auctions. US CPI results have shown that's a 9.1% of inflation rate as compared to it's the highest since 1981. India companies has shown their quarterly results, except IIT. If we exclude the IIT, that's a phenomenal. That's a very impressive performance has been shown in the June quarter. Officials has increased the rate by the 75 bps. And if we talk about that's a composite PMI comparison with the other developed countries, India is the only country that has increased as compared to the 28th, that's the end of the February results. It shows that the India is not much impacted because of that Russia-Ukraine war or the oil price hit. And if we talk about the inflation of comparison with the other countries, like India is the only that's the lowest inflation rate as compared to the other developed countries. It's only standards at 7% inflation. That's a external debt to GDP data. Again, India is the lowest one. And that's a 19% kind of ratio against the GDP. And if we talk about the GST collection, that's India has exponentially increased its GST collection after the pandemic, and now it's a equity market absolute return of the across the globe. That's Euro, France, India, and others has given the positive return, but only the three countries of China, Hong Kong, and Russia has given the negative kind of return in the month of July. And this is the Indian indices for the month of July. That's all the indices is moving upward during the month of July. And this is the sectoral absolute return. That's metal again has given the 9% absolute return, whereas the realty has given 17%, and all are the given positive returns during the month of July. This is the corporate profit to GDP ratio data. That again, that's after the pandemic, it's had increased, and the average as compared to the average as well. That's average was a 3.7%, but now today it's standing at 4.3%. That's a movement of the P/E ratio of the mid cap and small cap as compared to its respective average and Nifty P ratio. That's a if we talk about that's a mid cap P, it stands at today 20.4%, whereas its average is 18.2. It can be said that it's a slightly overvalued. It's expensive as compared to its average. But if we talk about the small cap, that's it has average is 13.9, whereas today it stands at 14%. It means it's a very at the cheap level, so we can acquire the small cap in our portfolio. And if we talk about the FIs flows during the month of July, and its number shows very positive results. At the end of the month, we have shown that the consecutively FIs flows is positive, and net flow also positive during the month of July. And this is the chart of the that's a 10-year GSEC as compared to the US market. That's a spread of the 10-year GSEC is 4.4% between US and India. And India yield curve has shift up as compared to the 6 months and the 1 month. And we can say that the Indian yield market, that's a bond market, is very volatile during the month of July, especially for the 2 to 10 year maturity bond. That's had very volatile in the month of July. And we talk about that's a market outlook there. The tug of war between the inflation and interest will be continue in across the world because of the inflation is increasing, and government is trying to just keep it controlled, and they are just increasing the interest rate. Growth in India remain resilient, and the high input cost pressure will impact on the earning of the companies in the near term. Keeping our finger crossed for the FI inflows continue, the market might show some stability. If we talk about the sectors, the domestic cyclicals like manufacturing, industrial, and infrastructure, and along with the in the financial sector, private banks will be favorable. In the rising scenario, in the rising rate scenario, that's suggested to invest in the debt 1 to 3 years durations funds like ultra short term, low duration, corporate bond, and the banking PSU debt funds. Thanks for my this side. Have a very nice Independence Day. Thank you.